So for our next session, continuing kind of our snaking narrative towards from the infrastructure play from Meta, we want to talk about the future of investment in AI. Where the investment strategies, what does that look like, giving the big macro and potentially, and also the micro vision of what that might look like. And we've got a great Nordic investor for you to listen to today. So Jeppe Christiansen with I feel my Danish is horrible, excuse me, Maj Invest will now speak and give you a bit of a presentation and an insight to that. So I'd like to welcome Jeppe on stage for this session now. Thank you.
Thank you. You can all hear me. I can kind of feel. And I've looked forward to come here and speak. I'm not an engineer. I'm not a computer scientific guy. I'm just a pure and simple investor. And I'll try to give you a perspective of how do these things look like if you have that kind of background and also that kind of perspective. And first of all, also thanks for inviting me here. I'll try to do my best. It's not an easy task. And AI as such, my session is called The Future of Investment in AI. I'm not sure I can give you any kind of clear conclusion here, but I can give you some of my ideas about how this look like. I think it's going to be kind of mind-blowing next 5 years. Might be even next 2 years. I don't know. It's moving fast. I had a flashback because many years ago, like 35 years ago, I worked in the financial sector also, and I had a background from Copenhagen University on studying macroeconomic and stuff like that. And I was working for first a bank and a pension fund, and I was asked to take care of international stuff. So I went to China way back. I mean, it's almost 40 years ago. And I came to China and I traveled there at least for half a year. And I came back and I thought, wow, I will never understand what's going on here. It's so complicated. It's huge, speaking 50 languages, working hard, saving money, investing like crazy, want to have a better life. I mean, this is a powerhouse at some point. I don't know when, I don't know how, but this will eventually turn out to be something really big. And for sure, I didn't know how to invest. And if I'd invested in China way back, I would have a quite low return, I think. But it became a powerhouse. This is not about China, but it became a powerhouse like no one foresaw. I didn't. So that was one. I got this flashback when thinking about AI. Then I got another flashback to the .com period because I worked in Danske Bank there. And I still remember, because it was so hard to understand what's going on, and I still remember what was said by Bill Gates. He said, everything will be built around the internet. And most people didn't really think about what was it he said. But think about, everything will be built around the internet, which came to be true. And it kind of accelerated because you got social media on the top and you got this computer in your hand, which is called a phone, smartphone or something. Then we had the social media kind of internet combined with social media is kind of a 10x thing because it's so powerful. Then today we have AI. I think AI is some kind of multiple of China.com social media. If you multiply, then you're perhaps around where you are. So that's kind of my first remark here. This is super interesting and it's going to be extremely powerful. It already is, but it will. So it's hard to say a lot about. I will try to do my best, and I think there are There are things that will not change that much. And then there are things that will be totally different.
The click is there if you want to
Yeah,
use it for the
I have some slides.
presentation.
So, and I have 7, 8 slides. I'll try to walk you through, and then I'll kind of sum up afterwards. Because I'd also talk about a little bit about things that will not change that much, like the growth of the world economy, for example. But I come back to that. But I'm working on it. My daily work will be in Maj Invest. I'm CEO, founder of the company. We are like plus 100 FTEs, and we have assets of 85 billion DKK. That's kind of our size. I will show you also we have some products everyone can buy. It's not to sell anything here, but we have 75,000 investors in Denmark and 250 corporate clients, and they buy stuff like this. Then I'll talk a little bit about things that will change and things that will not necessarily change that much. First, I'll talk a little bit about macro financial markets, and then I'll talk about some structural trends, AI, and give some kind of summary here. And if we start by looking at global growth rates, I happen to believe, looking into history of 200 years, the global economy, the market forces are so strong you cannot really understand. The global economy is a super tanker. A lot of people think we'll have recession tomorrow or something, but and maybe people think that Donald Trump will change everything. It might be he'll change a lot, but the underlying growth of the global economy and the market forces, they're way stronger than anything else. And that's why I call global economy a super tanker. We have to bear in mind, so better stay invested, because this is a good place to be. So better stay invested here. Think about the market forces the following way. Market forces kind of closed down Soviet Union, because Soviet Union, without market forces, they could not grow the economy. So it kind of closed down. On the other hand, China opened up because of market forces. I mean, Deng Xiaoping went to Singapore, found out that market forces would be quite strong. And that's why we're here today. The growth rates since 1980 in China have been kind of, no one in macro would ever think about it. That's because of market forces. So market forces are super strong, and I think they're way stronger than any president in any country in the world. Sorry, Trump, but you're behind. Right now we have growth rates of average will be 3%, and I think we will stay around 3% for a long time. Might go a little bit higher, a little bit lower, but the underlying growth is super strong. Then of course we have some recessions. We've had in 100 years we've had 2 recessions. Then we have some wars, which is a different story, but World War I, World War II. But we have 2 major global recessions in 100 years. One every 50 years. And one was called the financial crisis, and the other one was the one in 30, around 29. Therefore, the probability of having another recession is not huge. It's more like 2%, a global one. We can have regional ones, but global ones are very, very rare. So that's global economy. That was my first step here. So AI will not change a lot here. Central bank rates, AI will not change a lot. I'll not go into details here, but right now we are in a point of real balance, because rates are a little bit higher than inflation in Europe and in US. So they are more or less balanced. We had 10 years of 0 rates, and people came to believe that you would have 0 rates forever, which is of course not true. That was a very specific period just after the financial crisis, but where we are now is more or less in a balanced place when it comes to interest rates. Then we have equity markets in general, P around 20, 19. Somewhere like Europe, it's closer to 15. In US, it's closer to 25. I think in part of emerging markets, it's like 10. I mean, it's a screaming buy. from my perspective. Emerging markets is a kind of a screaming buy because it's so low priced. And people tend to believe emerging markets is something that's lower quality. Okay, please travel to Taiwan, Korea, places in India, places in China. You'll find out that we're way more advanced than Europe. So you get high quality and low price. Usually that's a good combination for an investor. And they are way low, but this is the average. Maybe US is too high priced, I think, in many areas, but generally speaking, global equity markets are more or less in place. So that's kind of, and I think AI will not change a lot here. So I have global growth, rates, equity prices will not change a lot. Then we have the structural trends. We have some, people tend to mix things up and everything will be called a trend. But there are not that many structural trends. As far as I understand, there are 3 major ones. One is geopolitics. I'll not go into that, but there is some kind of change there. I think most of us agree here. Some kind of change. I don't know the new world order, how it'll end up, but it's developing right now. So that's one major trend. The other one is the demography. We talked about that for years. We live longer and fewer kids, and there's a major change also. And then we have the very big one. I think AI is bigger than the 2 other ones because the consequence of AI is harder to foresee and it will affect way more because AI will affect the way you run your company, the corporates. It will affect the clients, the customers a lot. So both the company, the customer, it will also change the way you organize things. So it's going to change almost everything. And if you go into the companies, the suppliers, the producers, usually technology changed blue-collar work. Now it's going to change the whole thing, including white-collar a lot, and the way you organize. So usually technology will change only blue-collar now or make it more efficient. Now it's going to change both blue-collar, white-collar, and the way you organize. And it's going to change the customers, both the way they act, the way they understand things and the way that you distribute things, the way, the whole thing. It might be you can manipulate way more, which is a bad thing, but so all part of the equation will change. So I'll soon come to how to invest in it, which is not an easy question. But if we look into the AI universe, I once a year I go to San Francisco very often for a full week and hope to visit serious companies. And in Maj Invest, in fact, we invest together with some big guys in US. And so we've just been there not long time ago, together with a company, Icon IQ, and we met one of the board members of Anthropic and got kind of the full story of Anthropic, which is kind of mind-blowing. Think about a company, no revenue 2 years ago, soon to become a $50 billion company in terms of revenue with a margin of 50%. Sounds interesting. Within 2 years. And if you get this story and try to understand, then I try to kind of understand, what kind of world is it we're looking into? And in my kind of interpretation here, it's like we will see a new infrastructure being built. You can call it AI-based infrastructure. I don't know, but everything will be built around this AI kind of infrastructure. It's not that it's on its own because it's to some extent linked to internet and servers and everything, but we will see a new kind of infrastructure growing up because you need to go to a place to get data and to get algorithm understanding what you're doing. So this is kind of the center of it. That's the infrastructure. On the top of that, you have all the software. The old software and the new software. And below you have all the hardware, the energy, and everything. By the way, when you have energy, you also need batteries and lots of raw materials, metals. You need tons of these, and you need energy like crazy. So there's a lot of hardware and stuff down there, and a lot of software and stuff on the top. And from a very top-down perspective, I think the best place to be when you invest money will be in the hardware and the energy and the raw material. Because those things, if you want to grow supply here, it will take you 10 years. And very often, those being in that space have super strong pricing power. Means nice margins. Because if it's hard to grow supply, and there's a lot of supply, usually you earn a lot of money. So I think everything below there is a super nice place to be as an investor. On the top, I don't know, because competition will be very tough. And supply here is easy. If Netflix gets 500 million new people want to watch the film, making the supply for these people is not the biggest problem in the world. It might be you need some stronger infrastructure somewhere, but usually supply, if it comes to software, it's easy to have new clients. Zero cost and some income. That's also why people love to buy software. But now the world is changing, and up there you'll have tons of competition. I'm not sure I want to stay up there or go up there. I don't know, honestly. And you don't know the big gain from AI. Most of it will probably go to the customer, to the client using stuff, because prices will tend to go down. Competition might be to some extent extreme. I wouldn't like to be SAP. It might be the stock has overreacted. I don't know, short term. Long term, I wouldn't like to be there. So that's kind of my perception of what's going on. I would like to stay lower there. Then a couple of facts also, because a lot of people talk about the risk of a bubble. Is AI to some extent a bubble here? Well, after looking into it, and I'm not an expert here, but I came to believe it's more an engine than a bubble. And a lot of people try to kind of compare the .com with the AI here and saying, well, Anthropic OpenAI is kind of a bubble looking like the .com and stuff like that. But in my view, it's wrong. Couldn't be more wrong. Because I remember .com. You had no revenue. You had tons of interest and usually no revenue. And all the stocks kind of disappeared, maybe except for Amazon, but that's also a company doing trading, started trading books and other stuff. And by the way, they earn most of their money from cloud computing and not from being e-commerce. E-commerce is hard to earn money from being in e-commerce. But anyway, but look at that adoption rates going from 7 years to 7 days. So the speed today, it's crazy. So that's one thing. Then the big thing about why it's not a bubble, that's this one, because of revenue. I told the story about Anthropic. Revenue is scaling way faster than we've ever seen. And you have real revenue from these new companies. OpenAI, Anthropic, think about $50 billion revenue with a margin of 50% being built in 2 years. It's the size of Novo Nordisk in 2 years. It took Novo Nordisk 100 years, by the way. 2 years. And the growth rate is like, you can't really. And of course, you will have bubbles here. You will have stock-specific bubbles where people kind of misinterpret things. I mean, personally, I still find Tesla to be a bubble, but that's another story. And there are meme stocks and all the kind of crazy stocks out there. So it's not that I'm not seeing some kind of bubbles around, but there's not an AI bubble. And the reason why is this slide here, because they produce tons of revenue with nice margins. And of course, usually when you price a stock, it's a combination of earnings and growth rates, and also the time horizon. How long time can you grow like that, and when will you eventually, the growth rate will eventually go down to kind of the real growth rate of the economy. When will that happen? So calculating the right price for these stocks is very tough, and that's why it's hard to foresee, and that's why you probably have to invest in kind of a group of stocks. Usually, in Maj Invest, we always advise people to buy. Nowadays, we advise people to buy ETFs, AI semiconductor ETF, having 32 stocks globally in all kind of hardware related to AI, and globally kind of spread, because it's very hard to foresee individual stocks being the winner, and it's also very hard to price these stocks. It's super complicated. So that's kind of how I see it. Then I think that's my last slide here. I have a summary there. I'll come back to that later. I have a couple of minutes left. In Maj Invest, you might say, how do you deal with this in Maj Invest? We have a team. Our flagship product is called Global Value Stocks. We have like $6 billion in that product. The chief portfolio manager started to look into AI in 2012. I mean, 14 years ago. They built their own neural network system. Took like half a year. Tons of computing power went into that project. And it was not used to pick the stocks, but it was used to understand the stock market. So kind of, you call it a tool or research engine or whatever. And it's being developed and built through 14 years now to some kind of perfection, if you can call it that, because it's going to develop every year, every day, every week, but to some kind of perfection. So, and the team have used it and started using it even more last year. And by the way, if you look up performance of different categories here, you'll find out that our value portfolio outperformed last year 8% and this year 4% until now. I guarantee you nothing. But since they started using it, they've seen pretty good performance. And it's not because the AI system choose every stock, because it does not, but it helps you organize your work more efficiently. It helps you look at it organizes information. It makes you able to use your time the most efficient way. And there's only one critical thing here, that's your time. So you can prioritize your time and the way you work. You can also get a lot of information which you cannot calculate yourself because it's too complicated, and the need of algorithm your brain works slower than these IA models. I think most of your brains work slower, but I don't know. So you get this AI engine as a research tool. And for now, it's still the case that it's a tool for risk management, it's a tool for research, it's a tool for using your time the most efficient way. It might be later on it's taken over your job as a portfolio manager, I don't know. I think it's not going to happen tomorrow because it's multi-dimensional. and multidimensional problems tend to be quite big. Think about a chess player, how long time it took to beat a chess player, and that's only 2 variables, and you have 8 times 8. I mean, it's so simple. Think about an economic financial problem. You have like 1,000 variables, and you have a long period, and you have tons of dimensions. So even AI can be difficult to use here. So it's not that AI will take over everything in portfolio management, but if you do not work, if you do not use AI, you're out. It's very simple. You have to use AI in research and information, collecting information, and in all kind of areas of your job. So that's what we do in Maj Invest in most of the organization, and it's perhaps the most important thing to look at right now. Of course, we had some years when people thought it was ESG. It's not ESG. It's not that you should rule ESG out, but it was put in the wrong place with a wrong priority. Now it's kind of way lower, and at the very top you have AI. So that's kind of my perspective here, and then I will kind of take my conclusion, which is not about AI, but that's the broad picture. How does it look like? And then we have a little bit of time for Q&A. But this is more or less what I said. Growth will continue. No inflation risk. Interest rates at a balanced level. Equities long-term trend will continue. No recession. Trump crisis, I just wrote chaos. I don't know. Maybe I think that's the right word. Sovereign debt crisis, I think it's manageable. I think people are over scared by debt rates in Japan, China, US, Italy, and so on. It's not that it's not a long-term problem, because it's a long-term problem, but short-term, that means until at least 5 years, it's manageable through QE. And now we know QE works because we used it after the financial crisis. Then we have Chinese financial crisis. I think it's also manageable. Green investment, they've passed the bottom, and that's because now we need more energy. And the only thing is that you should bear in mind only profitable green energy, profitable in its own right, will survive. That means, the most efficient right now in US will be natural gas, a power plant. And usually the need here is electricity because of data centers and electric cars and stuff like that. Electric cars not in US, but the rest of the world. So what I mean by green investments is, first of all, profitable green investment. And megatrends, I've just mentioned the 3 big ones. So my end note here will be, I cannot tell you exactly how to invest because of AI, but personally I believe you should stick to what's below the infrastructure, the hardware, energy, all that stuff. That's the priority number one. And number 2 will be, you need to use AI in everything you do. So that's it.
I've got some questions for you.
Okay.
We don't have questions back up on screen yet, but I've got some questions here that's been submitted already. I think the first one here, which is quite interesting, you mentioned some efficiencies in using AI. Do you use AI in any of your due diligence processes today at Maj Invest?
There's a lot. I have one of my colleagues here in the room, Jannik, sitting over there, doing a lot of due diligence every week, every day. And I would need more than 10 Jannik if he did not use AI.
Okay, so we 10x Jannik
Yeah.
there.
Maybe more. Sorry, Jannik.
Another question here is, you mentioned margins. However, OpenAI have more than 500 billion USD commitment. How does that fit with much lower revenue?
Very good question. I didn't go into OpenAI because I think it's a really a difficult company to evaluate, honestly. to be very direct, I can be here. It sounds a little bit crazy, some of the things they're doing, like their commitments of billions of dollars without having any cash. But they got some commitment on their own for their own money. They get commitments, but they commit way more than the capital they have. I don't like that.
So do you still feel it's better than the previous sort of .com, but there is revenue, but maybe it's a slightly different?
Yes, it's very different, because this is kind of how to grow, how to. I mean, I think the perception there, the understanding, the view of Adman there, Zimmerman, will be that he need to do it, because if he's not a first mover, then someone else will take the room. So I think, and that's also why there is something here that's kind of a little bit scary, because most of those big tech investing in AI, they do it because they think it's profitable long term, but they also do it because they don't want to be the last one being there. And when your motive of investing will be not coming too late, it's not the same as investing because it's profitable. So it's a little bit tricky here. It's not tricky to understand that this is the future. It's tricky to understand how to evaluate, how to price it. So the tricky thing here, and that's why I say it's not a bubble. It might be some of the stocks will be mispriced, but it's not a bubble. It's something else. It's just hard to price. Super hard to price.
Thank you very much. We've got a bunch more questions, but we don't have time for everything. But grab hold of Jeppe if he's here for a while, if you have any questions for him. Thanks so much.
Thank you.